All right, folks, what you're looking at right now is the chart of the Russell 2000. This is the small caps. And as you can see here very clearly, they have been congesting for almost the entire, look at this, February of 19, they get into a congestion channel and they break out of the congestion channel literally at the last month. I love it. So the rule is this: the longer something, any asset, it doesn't matter if you're talking stocks, commodity, futures, forex, it doesn't matter. The longer the asset stays congested, the better the odds that the breakout that ensues, that follows, will be very strong and meaningful. Similarly, please pay attention. This is really good, important information, and you're not going to get this by reading Wall Street Journal. I can guarantee you that. The longer something has been trending, the better the odds are it's going to enter a congestion cycle, just like this one here, and stay in there for a long time. So what I'm getting to is this. The market generally has two major trends: choppiness, or two major trading styles: choppiness and trending. Now, I know you probably read Elliott wave, Gann lines, waves, this, that. I don't believe in any of that crap. I think it's all nonsense, okay? And I've been doing this for over a quarter of a century. As a matter of fact, in about a week, it's going to be 26 years that I've been trading. And I've tested everything under the sun. And I'm going to tell you, markets go sideways and they trend up and down. So we can't figure out which direction they're going to trend, but we know that after a good, strong congestion, the odds of seeing a breakout, a good, strong breakout, is strong. Now, the reason we're seeing this breakout is because China and US are playing nice again. Look at what happened when US and China started fighting in September. Small caps are very sensitive to this kind of stress on the market when we have a trade war. So since September, they started coming off. Fed started talking about lowering rates, and we entered a congestion. And now it looks like we're going to come up. Now, as long as China and US continue playing nice with each other and complete phase one and go into phase two, we're going to continue moving higher. But here's the problem. There's going to be a lot of hiccups. None of these negotiations are going to be solved and moved smoothly. Look at what it took us to get to phase one. We started in September, and December, the following December, we're barely in phase one, and we still don't know what the terms are going to be. So this thing is going to play out. It's going to take a long time to play out. And hopefully Trump nor China will renege. If they renege, oy, 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 oy. But either way, the point I'm making is we're about to see increased volatility. Increased volatility is simply the difference between the high and the low of the day. Let's say that the average over the last 12 months in the S&P has been $2. Well, we're expecting it to go to $3 or $4. We're expecting volatility to revert to its mean. Volatility, as you can see here, this is a 5-year chart of volatility. It's trading near a 5-year low of around 12, 8, 10. This is it. And now it's near 15. And it's going to come up to 20, maybe even 25, and maybe 30, especially if the stock markets start giving us the roller coaster and more ebb and flows. And I think that 2020, we're going to have more stability in terms of price movement, but we're going to see more volatility. Now, you may be asking yourself, what do you mean, Roger? How can you have more stability and more volatility? Let me explain. Let's say price is trading at $100. Let's say you're looking at a stock and it's trading at $100, and it moves $3 a day on average, but it keeps closing at 100, okay? Well, what if the same stock keeps closing at 100, but volatility is now $8 a day or $10 a day? It's still closing at 100. So that's stability. So what I'm saying in terms of stability, I'm not seeing the market go from 300 to 200 to 300 to 400 to 200. That I'm not seeing. I'm seeing a very slow, steady growth, double-digit growth, because earnings are expected to be double digits. But it doesn't mean volatility can't be higher, and that's what I'm expecting. I'm expecting a higher trading range between the highs and the lows. The closings may be more consistent. We may see a nice, steady upslope, especially with the small caps, as I showed you right here, beginning to play ball. They weren't playing ball. The large caps were on their own in 2019. But in 2020, small caps are going to play ball. So higher prices, more support, more stability for the overall market, but more volatility in the short term, with VIX moving to the 20 to the 25 level, possibly to 30. Now, if VIX goes from 15 to 30, that means your average stock is going to experience twice as much volatility as we saw in 2019. Am I expecting that? No. But I am expecting realistically about 1.5 times more volatility, which means that if you were trading Amazon last year and you saw Amazon going $40 or $50 up and down every day, you may see it go up $80 or $90. So this is the best situation to be in if you're a swing trader, because over a period of 5-6 days, you may see wild swings, but the price level may be more stable, which is perfect for swing traders. It means market doesn't really go anywhere, but you see a lot of swings. That keeps you in a safety zone. That's one of the top things I'm expecting in 2020. And I've got a lot more for you, but this is one of the biggest ones. And this is telling me we're going to have a lot more stability, especially if trade war continues moving along the way, but we're going to see more day-to-day volatility. And that's the best scenario for swing traders like you and I. All right, folks, listen and listen good. I'm going to give you some of the best advice going into 2020. Volatility will make it tough for buy and hold investors, but volatility is ideal for traders. The large swings in price means bigger gains in shorter periods of time if you stay nimble. Now, this is just one of my several predictions that I'm making in 2020, for 2020. In fact, I'm going live to give my members a complete roadmap of how to trade, a complete plan for the next 12 months. You really don't want to miss this. My goal is to double my entire portfolio, and you're invited to join me. Click the link below, get all the details. Folks, learn how to double your portfolio in 2020. Don't miss out on this. I'm going to give you all the details, stocks, sectors, everything you need, price levels, everything's included. Follow the link below. Do it now.